Hello and welcome to Money Minutes, your quick guide to making money. I am Kayezad, Adajania. What does asset allocation mean to you? Well, some debt instruments like non-convertible debentures, NCDs, fixed deposits, definitely a dash of equity like equity funds and probably investing in the stock markets, and a little bit of gold. Well, if that's your idea, then Rajesh Saluja of Ask Wealth Advisors would sort of disagree with you. I caught up with him yesterday and I asked him what his idea of asset allocation is. On the other hand, Ask Wealth Advisors also recently got its license under SEBI Investment Advisor Guidelines. I asked him about what this meant for the firm and for its investors, and this is what he had to say to us.
Right, so even before the license, we were offering advisory services, which were fee-based, but clearly now, after this new regulation in place, there are two different departments that we've had to create. One that will be offering advisory, and the other which will be doing wealth management, primarily distribution of products and asset allocation. But I think with this new regulation, what happens is it brings in more accountability. In the sense it's an auditable process. SEBI will audit it. You have to document the reasons you've given advice. You have to ensure that you profile your clients in the right way, which, like I mentioned, some of it we were doing, but today it's going to be much more rigorous way of offering advice, and it'll really work with clients because once they also notice that you are registered, you have a license, there is accountability in the kind of advice you bring in, it will build credibility. So I feel from an operational point of view, yes, it creates some challenges in the sense that you have to create two different divisions. You have to have a compliance officer looking at the advisory piece. You have to ensure that some of your people in the advisory business have the right certifications and qualifications to offer that advice. And those are the things that you have to put in place. But like I said, given that we've been doing it earlier, it's not too much of a new sort of effort that we have to put to get this in place. We have been recommending international funds earlier, but if you were to ask me today, we are more bullish on what India equity or Indian equities will deliver over the next 3-4 years. And hence, from an allocation perspective, we'd rather have our clients' money in good quality Indian PMS providers or Indian mutual funds as compared to the international market. And also, if you look at internationally what mutual funds have delivered over longer periods of time, you'll see, be it Europe or US, the returns are all 6 to 8% kind of returns. So to get those kind of returns on a longer term basis, plus have the whole risk of currency, clearly is not something that seems to work for us. We'd rather focus on Indian equities where we have in-depth knowledge right now, and we feel that the next 3-4 years will be far better as compared to the international markets. If you look at over a period of long period of time, given the inflation in our country, real inflation, keeping aside what you hear as WPI and CPI, but actual value of rupee has really depreciated over a period of time. So the only way a person can create wealth is to have fair amount of allocation in growth assets. And growth assets we define as equities, which should form a large portion of the allocation, real estate, and alternate investments like private equity, real estate funds, or other direct business opportunities, where at least the compounding of wealth can be far higher than the inflation number. Fixed income portion that you have in your allocation should be something that is specific to a goal that you may require. I mean, these are more for cash flow requirements that you may require at the end of 1 year, 2 year, 3 or 5 years. That's the only money that you don't want to take any market risk. You don't want to see volatility, and you want to be absolutely sure that there's liquidity as and when you require it. So that's the only amount that should be kept in fixed income. Now this is at a broader level, and then allocation, asset allocation really gets defined at each client level, depending on his age, his ability to take risk, the time investment horizon, etc. that he has, his experience, etc., etc. So you have to, at a broader level, wealth creation, like I said, happens with more growth assets, but then you have to sort of match that with your client and his profile and arrive at the right sort of allocation. It's a function of returns that he's expecting, function of the volatility that he can handle, and function of the investment and time horizon he has. So other than equities, I would always say real estate is a good option in India.